Hello, welcome to the Elated Real Estate YouTube channel. We are glad you've joined us. We're here today to talk about rising interest rates or interest rates where they are today. We're in October of 2023 and rates are right around 7.5%. And a lot of the people I'm talking with lately are asking me a couple of questions, including should I wait till rates go down? And the other question I get often is, have rising rates affected prices and put downward pressure on prices? And we haven't yet found that to be the case. So I'm going to share the screen with you and go through a little, I'm going to go through a little email guide that talks about the different reasons not to wait and what that looks like if you decide to do that. But let's go and open this up here. I'm going to show you, I think the best way to do is just to show you the screen of what rates and interest rates and what they've done over the last few months. But you can see this is our greater Atlanta area. This is all price ranges, all property types. This is the last 3 years. Even back in the pre-pandemic timeframe, you can see rates as rates were going up here until around May of 2022. Prices were pretty aggressively, or average, this is our average sales price data. They're going up pretty drastically over that period. And then they came down a little bit toward the end of last year. And then in January, we started back trending up to our peak, above our peak in June of this year. And we sort of softened up a little bit into what feels like more of a cycle of regular seasonality, where there's less of that here. We're seeing more of that pronounced here in our current time frame. This is only goes back as far as October. We're in mid to late November right now. And so we're looking at October 2023 data in our reporting here. So anyway, starting with that, I just want to now kind of dive a little into this information. I'm going to share a different screen here, but let me get to that. Let's share this one. This is our presentation today on the cost of waiting. And I got this email, and I thought it was really useful to demonstrate how what our loan today would look like. And the sales price example they gave of the property value would be what looks like $450,000 sales price with roughly 5% down. So that puts us here, and you can see where at 7.5%, if you wait as rates go down, and say they actually do go down to 5.5% in 2 years, you can see this line has property value appreciation, and the number they used here was just over, in 6 months, 1.12%, 5.1% in 1 year, and then 2 years at 9.3%. So then what actually has happened is actually more pronounced, and our actual October sales price was $462,645 in October 2023. So if you use those numbers, though, you can see that the appreciation is a bit more aggressive than the conservative numbers they used in this example. But it was significantly more at almost 7% compared to nearly 5%, and then closer to 15% over the last 2 years compared to 9% that they used. That's great for this example. That's very great. They've used a conservative example. Who knows what will happen in the future, but this is the information they used for the example. And you can see here in this bottom section on the left side, the appreciation of the property, and then your payments over time and what that actually looks like. So here we go. Here's our analysis that we come into. You've got a new loan today versus if you wait until rates come down, your loss in property appreciation is here. You can see that your loss in appreciation over 2 years is over $40,000 with their conservative estimate of appreciation. And then your amortization lost And then they sum all of this data up, and in 2 years, you're $48,809 worse off if you wait instead of buying and then refinancing potentially when rates do go down. So anyways, this summarizes it better. How much will it cost you? Is it better to wait, or is it better to go ahead and move forward and purchase? And then, a lot of people, when rates went down so much in 2020 and 2021, we definitely, almost everyone refinanced that could. So here's losses from appreciation and amortization are listed here. Your total cost per year is all listed out here. And then we've got here the loss in cash flow. If you wait 6 months, you have additional cash required of 348. So 1 year is 1,500, 2 years is 2,700. Then of course, that's all listed out here. So hopefully this has been helpful to think through like the cost of waiting. And, when it comes to timing the market, timing interest rates, timing prices, I think the big takeaway from all of this is when people move forward, we can adjust to the market conditions by doing things like refinancing, selling when prices go up, buying, and getting into the market at the appropriate times. But the trend overall is clearly that you can see from the example that I started for, or the data that I started from, that rates do go up and down. Prices generally trend upward, and it's likely, most people would try to make the case, it's likely better to go ahead and work on the assumption that here's a 5-year period in appreciation over that time, and you can see what that looks like. And then they've got a maximum, and you can see that rates at a higher rate or rates at a lower rate over time, it's likely best, because if you compare back to 2010, our average sales price for the greater Atlanta area was in less than 200,000. And then that's only 13 years ago. Now we're at over 500,000. So hopefully that's helpful. And I hope you'll reach out to us if you have any questions or if we can be of any help. We look forward to you joining us again soon.